Need funding for your real estate investment deal? Longhorn Investments is professional, reliable, and fast. Currently serving Texas, Tennessee, North Carolina, Missouri, Alabama, and Indiana, Longhorn Investments, LLC is a direct private lender offering short-term acquisition and renovation capital to real estate investors for both residential and commercial assets. With Longhorn Investments, you can receive up to 75% of ARV, finance up to 100% of cost, close in 3 to 5 business days, no income requirements, a streamlined, simple approval process, and no prepayment penalty. Formed in 2008, Longhorn Investments has funded over 4,000 loans since its inception and includes complementary businesses, including a title company and real estate law practice. Longhorn's wealth of experience puts them in the unique position of being able to help investors throughout all aspects of each transaction. To get started today and see why Longhorn Investments is the superior lending experience, call and speak to Lawrence Hopkins at 314-749-7616. That's 314-749-7616. Or visit Longhorn Investments at longhorninvestments.com. Longhorn Investments. Hard money lending simplified.
Universe. Media. Network.
Good day. I'm Samantha Smith with your United States real estate investing news. Is this the end of great metropolitan areas? A virtual meeting with industry titans Khalid bin Khalifa Al Thani, Chairman, Qatari Diar and CEO, Qatargas, Bruce Flatt, CEO, Brookfield Asset Management, and Rob Speyer, President and CEO, Tishman Speyer with Bloomberg's Massar at the Qatar Economic Forum, led to the questioning of the fall of great cities in the fallout of the pandemic. Report courtesy of anchor, Massar with Bloomberg TV.
In my lifetime, I'm 51, 5 times, and I've spent my whole life in New York, 5 times people have been predicting the death of New York and the death of cities. And every time they've been not just wrong, they've been profoundly wrong. And through crisis, New York and other big cities have innovated and made themselves better. And that's been happening not just for 51 years, but for hundreds of years.
But even though companies are increasingly saying as a perk to hiring, and we're hearing this in massive surveys, employment surveys, that now a perk is you can work anywhere you want, that is going to, we know people are leaving jobs if they don't have that flexibility. That doesn't change things at all.
You're also having companies say that if you leave, your salary is going to be adjusted to reflect the cost of living where you're moving to. So I don't think we're going to fully understand those demographic trends until you see where people end up on the other side of COVID. And again, if we were together and you looked outside my window or you went to Central Park, I don't think you would be doubting the future of New York. And the same would be true if we were in Paris, London, Tokyo, Toronto, or Doha.
Bruce, come on in on this, because I do wonder, like logistics centers, data centers, is that more attractive? Is there something that's more attractive now that we've gone through the pandemic?
What Khalid should have said about his residential is he had some projects in London that he could sell to people that are listening to this call. But first, but I'll do his pitch for him. Look, here's what I would say. There's no doubt the one sector, and we've been investing significant amounts of money in it over the past 7-8 years. Data centers didn't exist really 15 years ago. There's enormous amounts of money going into the data center business, and it's going to continue for a long period of time. But when you look at the amount of capital in that area, or in life science, or in some of these niche areas, they're phenomenal investments, and they have been great investments, and they will be in the future. But they're relatively small dollars globally. And so, yes, they are great investments, but the true value investments today, and where big money can be put to work and where significant value can be made, is buying in these great cities today, when people have a different, more pessimistic view of them.
More competition for mom and pop real estate investors as the large firms scoop up as many properties as they can handle or as much as they can stomach. Strange bedfellows. Quoting Bloomberg, Kkr and Co is making a fresh play for the suburbs, forming a new single-family landlord, My Community Homes, that plans to buy and manage rental houses across the U.S. Kkr is investing in the platform through its real estate and private credit funds, according to people with knowledge of the matter who asked not to be identified because the matter is private. The number of homes and geographies targeted by the venture couldn't immediately be learned. A representative for New York-based Kkr declined to comment. The firm's latest wager comes as Wall Street plows money into rental homes, betting that aging millennials will want larger living spaces to raise kids, and low inventories lift prices out of the reach of many families. Kkr's credit arm previously backed Home Partners of America, a single-family rental company that Blackstone Group Inc. agreed this week to acquire for $6 billion. The firm is set to generate a roughly 20% internal rate of return, or IRR, from its 2014 and 2018 investments in the company, a person with knowledge of the matter said. Elsewhere in the sector, Centerbridge and Allianz Real Estate said in March they led a $1.25 billion equity commitment to Upward America Venture, a partnership with Lennar Corp that intends to buy homes. And Invesco Real Estate recently backed Mind Management to spend as much as $5 billion on buying single-family rentals. Miami-based My Community Homes is led by Chief Executive Officer Marcos Egipciaco, whose prior company, Sovereign Real Estate Group, helped institutional investors buy single-family rentals. His latest effort has hired staff in Florida, Georgia, and Indiana, and has open positions in North Carolina, according to LinkedIn, end quote. REINFT? Blockchain enthusiasts possibly have another reason to rejoice. It seems like it was only a matter of time before the world of the NFT seeped into the real estate industry. Apparently, that time is now. Quoting Mike Butcher of TechCrunch, we previously wrote about Proppy using blockchain technology to smooth real-world real estate sales by introducing the concept of smart contracts. Proppy was the first blockchain startup to make that work. Now the company is pushing the boundaries again by auctioning a real apartment as an NFT. Although one might want to brush this aside as a stunt, the event is designed to make the point that it could well be done legally. And, by golly, they are going to try. The auction will be of the NFT attached to a modern, brand new one-bedroom apartment in Kiev, Ukraine, that Proppy previously made history with by making it the first-ever blockchain-based real estate sale. The NFT created by Proppy will, it says, transfer real ownership of the property. Just in case you haven't been paying attention, NFTs, or non-fungible tokens, are cryptographic tokens that represent a unique asset, such as a piece of art, music, or other collectibles, and certify ownership digitally. NFTs have set the crypto world alight with their potential to be applied to just about anything, including a work of art by Banksy which was then burnt. Natalia Karyaneva, CEO of Proppy, said, "This NFT will go down in history." For Proppy, it is a major milestone in leveraging the promise of blockchain technology and non-fungible tokens, NFT, to achieve self-driving real estate transactions and real estate participation in the decentralized finance economy. Here's how this is all going to work. Arrington has signed legal papers designed by Proppy's lawyers for the NFT to transfer ownership to a future buyer. Proppy then conducts the NFT auction and receives payment in cryptocurrency. The winner in the auction becomes the owner within a minute, after filling out KYC details. The Kiev property is owned by a USA-based entity, and when the auction completes, the new owner of the NFT becomes the owner of the entity and thus the property itself. This process is repeated every time the NFT attached to the property is resold. In an interview with me, Karyaneva said, "We were brainstorming and this appeared to be a natural development of our white paper of 2017. And in fact, many things we transact, real estate, via property, we are actually already kind of doing NFTs, but with our unique smart contracts. But now the NFT concept provides a different approach, where a property can be transferred between two wallets, peer-to-peer. Thus we do not need to change the name of the owner in the land registry. And this applies to many countries, as well as the United States. This model will work for the United States, and overall, there is this notion of buying real estate via LLC in the United States to preserve the privacy of the owner." Over the same call, Arrington added, "Coming at this from a crypto angle, we've seen what happens how DeFi gets plugged into credit markets. If I have an NFT or any DeFi asset I can then borrow against it, without a middleman. Right now, if I have a real piece of real estate, there is no way for me to borrow against it, without a middleman, because I have to go through a bank and get a mortgage or whatever. And it's also the friction, all of the costs in terms of speed and how long it takes. If we can find a way to plug real estate and other real-world assets into DeFi, I think that the amount of credit that can be created around that is in the trillions, eventually. And so I think that has to happen. The questions around this are legal and regulatory. The legal stuff around this is tough, and so Proppy has done a lot of work with that. But if they do, I think that the idea of an NFT representation of a real-world asset purely from the point of view of ease of trade and ease of access to credit markets is a big idea, end quote. For our quick content suggestions this week, we have: within an already favored sector, industrial big boxes are highly prized by all types of investors from wealth management, and how much do multifamily investors need to worry about demand for SFRs, also from wealth management? To research further, see links and more from these reports in the news notes. I'm Samantha Smith for United States Real Estate Investor News, UnitedStatesRealEstateInvestor.com.
Let's face it, your property is ugly as ARS Construction does it right. From roofing to exterior to all your interior needs. For a free roofing estimate, call now at 844-445-ROOF. That's 844-445-7663. Or visit AdvancedRoofSYS.com. That's AdvancedRoofSYS.com. ARS Construction, roofing and construction done right.